Many claim Tesla stock is currently not a good investment, and this has caused a sell-off of huge proportions. Tesla stock is stuck in a 4-month consolidation according to MarketSmith charts, and its relative strength line is trailing. When comparing Tesla to the general stock market, it's clear that not only Tesla is down, but also huge tech companies like Google, Microsoft, and Apple are selling off. What should you be on the lookout for in the future with Tesla? What's the reality behind Tesla stock's recent decline? Will the stock continue its recent rise, or will it begin to fall again as it's done every time it's gone up? Keep watching to find out. Tesla Incorporated has seen more volatility than any other vehicle company in history as investors consider the impact of the Federal Reserve's projected interest rate hikes. Higher interest rates are generally regarded as less beneficial for assets, with valuations based mostly on long-term cash flow forecasts. With a price-to-earnings ratio of 176, Tesla surely qualifies as a growth stock. During the pandemic, its stock soared on the back of record deliveries and the Biden administration's commitment to prioritize electric vehicles as part of its climate change strategy. Investors eager to join in on the electric vehicle action poured money into Tesla stock, propelling the firm above the $1 trillion mark. In 2022, the stock reversed its trend. Tesla stock has dropped by almost 24% since the beginning of the year, despite the business reporting record deliveries and analysts writing gushing letters of recommendation. Tesla's stock has been dragged down by a broader sell-off in high-growth, high-multiple stocks as investors prepare for tighter monetary policy and higher interest rates. Although Tesla stock generally moves with little news flow, there were a few noteworthy occurrences recently. To begin with, even though COVID-19 cases have been increasing in the United States in tandem with the spread of the more infectious Omicron virus variant, investors appear to be less concerned about the economic impact this time around, as studies have shown that the variant likely causes far fewer severe infections. Furthermore, the U.S. Food and Drug Administration recently approved emergency use authorization for oral COVID medicines from Merck and Pfizer, easing fears about the virus's impact. This has aided larger markets as well as high beta equities like Tesla. Separately, Tesla appears to be taking more steps to protect its battery supply chain, having signed a new battery supply agreement with miner Syra Resources for graphite, which is used in battery anodes. Tesla's delivery figures are also expected to be high on investors' wish lists. The recent price action on Tesla shares can be seen in two ways. According to one perspective, Tesla has held up well during this year's sell-off. When compared to the over 90% annualized returns between 2017 and 2021, Tesla's previous year-to-date drop of 28% in 2022 has been very minor. Given enough time, the business fundamentals appear to believe that Tesla will continue to rise. In the coming years, the electric car sector is predicted to grow rapidly. Through 2027, the compound annual growth rate will be 23% according to Mordor Intelligence. The second point of view is that despite all of the macroeconomic and geopolitical challenges, Tesla stock has increased by 77% per year over the last 5 years. Even though Tesla recently reported better than expected Q4 2021 earnings and maintained its guidance for 50% plus growth in 2022, the company stated that it's still experiencing supply chain issues this year, stating that it will not be producing any new models such as the Cybertruck this year. It's probable that may be causing some of the stock's problems. Tesla's advantage in self-driving technology, one of the most potent trends in the car industry, has investors wagering that it will help control the future of transportation. However, the company's popular driver assistance technology Autopilot has come under further regulatory scrutiny with the National Highway Traffic and Safety Administration, announcing that it's investigating 11 incidents of Tesla vehicles colliding with parked first responder vehicles. Furthermore, 2 U.S. senators have asked the Federal Trade Commission to look into whether Tesla's driver assistance systems, dubbed Autopilot and Full Self-Driving, are misleading. Tesla's shares fell by nearly 4% in 3 trading days on the heels of this announcement. As the business prepares to report earnings for the fiscal first quarter, many investors have slashed Tesla stock by more than 20% since the beginning of the year. Options traders appear to be placing bets, implying that they think the recent downward trend for the Tesla share price will resume once more. That's because recent option order sentiment has shifted from bullish to bearish as the share price has tumbled and the electric vehicle sector continues to be plagued by the supply chain constraints. Building and marketing automobiles is tough and expensive. Tesla is not immune to these costs, and they will make it even harder for the company to repay cash to shareholders over time, which is how investors gain value as a stock owner. For example, Tesla spent $7.3 billion on capital expenditures in the last year, which is only slightly less than the $9.9 billion in cash flow from operations. These figures translate to $2.6 billion in free cash flow over the last 12 months. With a market capitalization of $1.05 trillion, the price to free cash flow ratio is well over 400. Worse, Tesla has only produced this free cash flow this year because its accounts payable and accumulated liabilities have increased by $2.7 billion. Tesla will eventually have to pay this money to suppliers and staff, rendering the $2.6 billion in cash it generated inaccessible to shareholders. To counteract this, Tesla has increased car prices. We believe this might be the cause of the recent upward spike in the stock price. It seemed to renew investors' faith in the brand, albeit temporarily. Tesla raised pricing on all US vehicle models, as well as some Model 3 and Model Y variants in China today. According to the source, Tesla's China website revealed a fresh 5% rise in beginning price for the Model 3 Performance to the equivalent of roughly $57,650. Two of the company's Model Y SUV options have also seen a 5% increase in price. The investor reaction to the price hike appears to be that the company's supply remains tight. The company's products continue to be in high demand, and growing vehicle prices will help it retain its profit margins even as production costs rise. This shows that Tesla is not immune to market trends, and its stock was down nearly 25% from its all-time highs at the start of the year. After the last sell-off, it's unclear whether speculative traders will rush in to acquire Tesla stock. The company is still overvalued, and high-growth stocks will continue to suffer if the market continues to focus on risks. But based on recent history, Tesla stock has a good possibility of increasing in value over time. In the last 10 years, Tesla stock has seen a 21-day drop of 21% or more on 71 occasions, with 65 of these resulting in Tesla stock increasing over the following one-month period, or 21 trading days. This historical trend indicates that Tesla stock has a 65 out of 71 chance of rising in the future month, signaling that Tesla stock could be a decent choice in the near term. Some analysts' earning forecasts for Tesla continue to rise. Tesla's stock is currently selling at around 100 ahead price-to-earnings ratio, with analysts expecting earnings of $9.04 per share in 2022. It's worth noting that profit projections for 2022 have risen by as much as 16% in the recent months, which explains why despite the massive sell-off in the high price-to-earnings ratio group, the market is still able to bear the sky-high valuation. Despite the stock's dip, many analysts remained upbeat, focusing on Tesla's leadership position in the battery electric car sector, which is growing and becoming increasingly competitive. And regardless of the recent sell-off in Tesla stock, the firm remains the world's largest automaker by market capitalization, even though Toyota, Ford Motor Company, Stellantis NV, and Honda Motor Company Limited have all outperformed Tesla in recent years. While Tesla has managed to outperform its predicted vehicle delivery totals, none of the other major auto stocks, with the exception of the recently publicly offered Rivian Automotive Incorporated, have seen as sharp of a drop as Tesla. The future direction of Tesla's stock price will be determined by a variety of factors, including the continuous adoption of electric vehicles and the state of the automotive supply chain. It will almost certainly be influenced by the stock market's direction, as well as the impact of central bank monetary policy. It's vital to remember that stock markets are still incredibly volatile, making it difficult to predict a share price in a matter of hours, and even more difficult to make long-term predictions. As a result, experts and algorithm-based forecasts can and do make mistakes. Do you think Tesla stock is going to continue rising, or do you think it's going to go back down? Comment down below.